Hello, and welcome to myfinanceteacher.org. Today, let's have a look at this interesting gold miner, Alamos Gold. The ticker for that is AGI. As usual, for our valuation of gold and silver miners, we'll look at the value of the reserves in the ground after the production costs and after the company's long-term debts, discounted based on the time it will take to extract those reserves out of the ground, and we're looking for that value per share to compare with the market price. Looking at each of these valuation factors one by one, we start with the gold and silver prices as the markets closed on Friday. By the way, today is 1st of November and this video is going to be posted to the members at myfinanceteacher.org today on Sunday. Maybe a couple of weeks later, when the price of Alamos Gold is possibly already much higher, I might consider posting this video publicly on YouTube as well. So if you're watching this on YouTube, and if you would like to get more detailed, more timely, and more frequent updates on a range of markets, including particular gold and silver miners, why not join us at myfinanceteacher.org? You can do that by clicking this register button. The first month is only $5 and is $10 per month after that. So coming back to the gold and silver prices, I'm going to look at three scenarios: balanced, conservative, optimistic. These are the prices for each of the scenarios. Notice that even in our balance scenario, the prices I'm going to plug into the calculations are 2% below the spot price. In our conservative valuation, the prices are a further 10% below the balanced price. And even in the optimistic valuation, our prices is only 10% above the balanced price. So these prices are only 8% above the spot price. And remember, this sort of valuation generally works in the longer term rather than short term. So do you think that gold price might fluctuate somewhere around $2,000 over the next couple of years? Do you think silver price might fluctuate somewhere around $26 over the next couple of years? Or do you think the optimistic valuation should be much higher? That, of course, is for you to decide, but in my opinion, there is a very nice potential for considerably higher precious metals prices over the next couple of years. So even in our optimistic valuation, we are very modest here, trying to avoid buying any overvalued assets. Next, let's apply these prices to the reserves that the company has. Proven and probable reserves of gold make up 9.42 million ounces, and for silver, that's 34.3 million ounces. You can find that information in the Q3 report at the company's website. For measured and indicated resources, we have 7 million ounces of gold and 16.6 million ounces of silver. Beyond that, the company also has inferred resources, but we don't even include those into our calculations, as if the company doesn't have any inferred resources. That means that our calculations lean more on the conservative side rather than being too optimistic. Besides that, in our conservative and optimistic valuations, we don't include any of the measured and indicated resources, as if the company didn't have any of those. It's only in the optimistic scenario where we include only half of these measured and indicated resources in the valuation. Next, the cost of extracting those resources out of the ground. All-in sustaining costs for gold are $1,050 per ounce, and the company doesn't actually report all-in sustaining costs for silver. Instead, I'm going to use a gold-silver ratio of 80. It's actually pretty high compared to the market prices of gold and silver, which means we actually underestimate the actual value of the silver in the ground, again making our valuation lean on the conservative side. Next, the balance sheet, which you can find in the financial statements for Q3 on the company's website, shows that the company doesn't actually have any long-term debts, which I think is very interesting. For the number of shares outstanding, we have 394.43 million shares, of which 0.3% are insider shares. We look at insider shares because those tend to be stronger hands, potentially propping up the share price. And this data is from Yahoo Finance. Next, we want to take into account the time value of money, because it will take time to extract those reserves out of the ground. And at current production rates, that will take around 22 years, and I'm going to apply a discount rate of 5%. So with all of that in mind, our conservative valuation, which remember includes a gold price of only $1,657, is gold price going to fluctuate down at that point over the next few years? Well, you tell me. I think there is a good chance gold price will be much higher. So this scenario is more of your risk level. in case if precious metals do decline over the next couple of years. And we're going to use a silver price of $20.9. And remember, this valuation only includes proven and probable reserves without taking into account any of the measured and indicated resources. All of that gives us a valuation of $12.23. And as you see, even a conservative valuation is considerably higher than the market price. So I am pretty excited by this find. Tell me if we found a nugget over here, or is there something that I missed about the company? Let me know in the comments. We all can learn from our discussions at myfinancesteacher.org. To be honest with you, I'm actually quite interested to get a position in AGI even before I convert my GLD positions into a range of gold and silver miners. Next, let's have a look at the balance scenario, where we plug the price of 1841 for gold and 23.2 for silver. And again, we only use proven and probable reserves in this scenario. All of that gives us a valuation of $15.94, which is, well, nearly double the ongoing market price of $9.15 as it closed on Friday. And lastly, in our optimistic scenario, let's have a gold price of 20.25 and silver price of 25.5. In this scenario, we include all of the proven and probable reserves and only half of measured and indicated resources. And this scenario gives us a valuation price of $24.91, which is around 2.5 times the ongoing market price. So I think this is a pretty interesting find. Let me know if you agree or disagree with me. Next, looking at the company's highlights, one thing I want to point out is the company has a pretty good cash position of $274 million US. And remember, the company doesn't have any long-term debts. So that's one highlight to keep in mind. Another thing I want to mention is that gold production might actually start at La Yaqui Grande project at Mulatos mine in Mexico sometime in Q3 of 2022, with expected average production of 123,000 ounces per year over the mine life of around 5 years. So as this event approaches, the market price might actually appreciate pretty well in expectation of the start of the production. So that's also something to keep in mind for the long term. And just one more highlight, which is not extremely important. Don't forget that the company also pays nearly 0.9% in dividend yields at the moment. So that's a bit of an extra bonus for you there as well. Lastly, let's have a look at the chart, where the bars is the chart of AGI and the orange line is the price of gold. As you see, AGI does have a bit of a leverage to gold price. Over the next few months though, as precious metals are likely to rise into the rallying stage of the next intermediate cycle, AGI should do very well. Some of the resistance zones above would be something like $11 based on the August high and something like $11.6 based on the July high. But I think there is a good chance that over the next several months, these resistance zones will probably be broken. On the downside, the support zones are somewhere around $8 based on most of the recent lows. And below that, just above $7 based on the February and April highs, as well as the summer lows. So there it is, Alamos Gold for you. If you like this sort of analysis, make sure to click the like button. And if you're watching this on YouTube, subscribe to the channel as well, even before you consider joining us at myfinancesteacher.org. I hope you had a good weekend and good luck in your trades.